Hey, how are you? I'm Duncan McPherson, and welcome back to my channel. Today is the second part of our two-part video series where we're diving into tax audit issues from operating your US-based business up here in Canada. And for more tips on how you can better navigate the Canadian tax system as a US business, hit that subscribe button and the notification bell. Or better yet, contact me directly through themactax.com for some extra and more personalized assistance and to help you avoid all the BS you're probably already experiencing up here. Okay, so as promised, I'm going to walk you through what happens when CRA decides to audit you. Okay, so you've triggered an audit. Oops, now what? So here's the play-by-play for you. First, you will receive a notice either by mail or electronically of what CRA is looking for. They may ask you to send them specific documents like contracts or invoices, but this is where we differ greatly from the IRS. CRA will scrutinize a single line of your income statement and send you an inquiry letter specifically about that line. This letter will then request that you prepare specific backup, scan that backup, and then upload it onto their website. Again, everything that's happened to this point can happen without a human ever having looked at your file. Unlike Form 1120 in the US, every line of your income statement is coded to a unique identifier on your Canadian corporate tax return. These identifier codes are known as your GIFI code, G-I-F-I, FYI. Thus making it a no-brainer for CRA to stick an algorithm on your tax return and ask you for this information, which is obviously what they're going to do first. Next, they're going to review your documentation. What else would they do? Okay, so they've contacted you, and now this is where CRA, ergo a human, not a computer, will go ahead and scrutinize your records. And take it from me, the cleaner your records, the faster this process goes. CRA may also take a look at other information at their fingertips. Think sales data, GST returns, and as I said before, even your social media posts. Next comes the interview process. Sometimes CRA will want to speak with you directly, either in person or over the phone. They'll ask you questions about your operations. And yes, honesty is always the best policy, because next comes the assessment process. Okay, the assessment process. Where after reviewing everything and interviewing you, they will issue you a notice of assessment if they think you owe taxes, interest, and/or penalties. At this point, you have two choices: either pay up or appeal the decision. But here's the thing. If we decide CRA is wrong, I can prepare your appeal and be your representative through the appeal process. Just come to me in the early stages, and I will ensure that this never happens to you in the first place. I'll tell you right now, though, avoiding an audit is not foolproof, but you can lower your risk. In fact, you can lower it substantially. Okay, here's how you stay one step ahead. Actually, 2 or 3 steps. First, register for GST on time. If you listen to my video on this, I actually recommend that you register early, not later. Don't wait for CRA to come knocking. However, if you haven't registered and you've crossed that $30,000 Canadian barrier, don't wait for CRA to come knocking. Get registered. Always make sure your GST records equal the sales on your tax returns. This makes you an easy target if they don't equal, okay? That's step number 1 in avoiding an audit. Make sure your GST returns equal your income tax return. Second step, maintain detailed books and records. Maintain detailed books and records of all Canadian transactions. This includes sales and expenses and even communications with other Canadian entities, whether they're related to you or not. Crisp and clean books and records are kryptonite to CRA. It is your best protection against their algorithms. Their algorithms can pick out sloppy bookkeeping like that. Okay, number 3, stay updated on tax laws. Okay, tax laws are changing all the time now, especially in the age of digital commerce. So make it a habit to check for updates or subscribe to this channel for the latest tips. And the easiest way to stay ahead of the game? Hire a Canadian CPA that is familiar with both Canadian and US tax. If all this feels a little overwhelming, consult a cross-border tax expert. Yes, it's an expense, but it's worth it to avoid costly mistakes. To quote an overused aphorism, an ounce of prevention is worth a pound of cure. This is the truth and you know it. So I'm very aware that I haven't discussed with you what happens during the full audit. And that's because it's almost exactly the same here in Canada as it is in the United States. They come to your premise, you give them what they ask for, and you wait for the results. Sounds easy enough, right? But let's be honest for a second. Dealing with taxes is never really that easy or fun, right? And you probably already know that staying proactive can save you from an audit's worst consequences. So if you're looking to get expert guidance through this mess, contact me through my website, themactax.com, because that's what I'm here for. Or better yet, just click on the link below to get started. We can work all of it together, and thanks for watching. I'll see you on the next video.